So now let's go over trading strategies. So the first one is short-term trading strategies. Shorter-term investing can be profitable, but it carries a greater risk profile. This is due to volatility. When using short-term trading strategies, you should set clear entry and exit points. So that basically means when are we going to go into the market and when are we going to exit the market. So you need to make use of things like stop loss orders, which is a type of trading, to limit the losses, and you need to practice good risk management. And you need to be very informed about market conditions, the developments and the advancements in the market and news about the market. So all of those things are talked about at the start of this course. Then now we're going to go into long-term trading strategies, which is what I promote the most. I think this is the best way and the safest way. Now, I recommend long-term trading personally because it's much safer. It's what I personally do. I'm not the most advanced trader in the world, which is why I do long-term trading, because it's the safest way to do it. Long-term investing basically involves holding positions for very long terms or long periods of time, usually over a series of months or years, to capture the long-term growth potential of the market. Let's go over a few terms. So there's first of all hodling, which is kind of a short form for hold on for dear life. So hodling basically means it's a process that a lot of crypto bros do. So hodling basically means that you buy for long periods of time, but you hold all of your investments, okay? So regardless of the short-term market fluctuations and things which start to look bad, you hold on for dear life. You don't shift what you're holding on to, right? This strategy requires strong conviction and belief in crypto, and it can work out, but sometimes it leads to never selling, which can also be bad too. Then dollar cost averaging, or DCA, which we talked about earlier, is very effective because we're investing a fixed amount in regular intervals over a period of time, like every week or every month, on a routine basis, which is in effect a very good strategy and a good value method of investing long term. Value investing is also another strategy to look to. This is basically where you look for undervalued cryptocurrencies with long-term growth potential in them. But this is where those research tools come into play, because this requires very intense and careful research and analysis, and it's better for more experienced investors. I stay away from valued investing. Then we have growth investing. So growth investing involves looking for cryptocurrencies with very high growth potentials and invest in them for the long term. And it requires knowledge in analyzing market trends, technical indicators, and industry developments to basically identify high growth opportunities, okay? Out of all of these different methods which I've outlined, I'd recommend for the average person and for most people, unless you're actually a professional investor, is to do dollar cost averaging for long-term investing. This is good, and it's the method I personally use just because it's safer and the chance of losing your money is a lot less than the other methods.